Welcome, agentpreneurs, to today's episode of the Daily List Report. This is week 2. Last week was our first week running the show. Super exciting. This is a labor of love for us in the company. We hope you're enjoying it. We're trying to bring you extremely timely, relevant, in-the-moment content. We've got a bunch of experts. Last week we talked about the CARES Act, and we got an agent's perspective. We talked about a new digital open house product. We talked with our in-house economist about what's going to happen with the economy from our vantage point. And this week we posted the lineup. So every day, Monday through Friday, 11 to 11:30, we're live here. If you can't make the live show, that's okay. There's a recorded version that'll be posted on Facebook. We actually just started posting the videos to YouTube as of yesterday, and so we'll get a link to the YouTube channel inside of this chat window. So please take a look out for that. I'm so sorry about the audio. This week we have a really amazing lineup. So today we're going to talk with our Chief Operating Officer, Wessal Khader. I'll introduce her in just a moment. We're going to talk about what's happening in the market from a mortgage perspective. Obviously, it has major implications for what's happening. And because I screwed up, I'm going to share something fun and interesting with you guys. So bear with me here. But we're all spending more time on the internet than ever, I think, right now, and there's no shortage of fun memes and interesting stuff out there. We found a really cool tool that I'm going to show you right now. So check this out. You can see my face. So for those of you who are doing Zoom now more than ever, or whatever your video conference of choice is, there is a free product out there called Snap Camera, and we've been having so much fun for it. Wessal, you can't see me right now, but I got my nerd face on, and it's excellent. And so if you're looking to bring a little levity to any of your meetings, download Snap Camera. We have no relationship with them. It's just a free, fun tool, and you can do wacky stuff like this. You can even make your face look like an egg. So you can do all sorts of interesting and fun things. So Snap Camera, we could post a link in the comments. Super fun. Somebody just told me that my gesticulations were enthusiastic, so even though you couldn't hear my voice, it was okay. But I promise we're going to get this right. So let's talk, as we always do, a little bit about the headlines. So we're tracking a few things today. Lots and lots of changes in the mortgage market, right? So Wells Fargo actually just announced that they're curtailing their jumbo loans because they're unsure what's going to happen in the future. What does that mean? It means that if you have a jumbo loan with Wells Fargo, in most markets that's $510,000 or so. In some markets, we're here in Southern California where it's super rainy. Jumbo limits are more around $750,000. Unless you keep $250,000 of cash in their bank with them, you're not going to be able to get a jumbo loan. And so we're seeing, as we saw last week with employment verification on the day of close or the day prior to close, right? We're seeing a tightening in this. And Wessal, when she comes on, is going to talk more about what she's seeing in the market. So that's a change as of today for Wells Fargo, which will have an impact on some of your customers out there. 2, I think in the good news, Allstate Insurance is actually going to give refunds. And so this is interesting, right? Because I don't know about you. I saw this funny thing on Facebook, and it says, I don't know about you, but my car is getting 3 weeks to the gallon. And that's how I feel, because we're just simply not driving as much. And if we're not driving, that means we're not getting into accidents. We're not getting tickets. Our cars aren't getting the wear and tear. They're not breaking down. And so Allstate announced that they're actually going to give money back to personal auto insurance customers. It looks like that's going to be around 15% money back based on your monthly premium for April and May. And Allstate is actually going to automatically deposit this money back to the customers. So this is a great piece of information for you to share with your sphere. For those of your customers and people within your world or realm that are Allstate customers, they're going to get a refund. So that's really cool. The last thing that we're tracking and we've been looking at is, and this has affected some people even within our company, is that the short-term rental income is obviously way down. So people, a lot of properties, and I'm sure a lot of you out there have sold properties to people as investment homes and condos that were explicitly going to be used for short-term rentals, Airbnb as an example. Obviously, that market has disappeared right now, and it's totally shuttered. I know separately that Airbnb is trying really hard to not lay off any of their 7,000 employees, and so they're taking pay cuts at the executive level, they're cutting back on their ad spending, and they're trying to ride through this storm. But this is particularly important for those of you out there who have customers who have purchased properties explicitly to rent in the short-term, to offer up in the short-term rental services like Airbnb or VRBO or whatever. And so keeping an eye on that. So those are 3 sort of big headlines for today. Again, this week, really exciting. Tomorrow we've got Dr. Weber coming on to talk about data and the implications around data and help you to understand that better. On Wednesday, we're going to talk with Ryan, our Director of Product Management, about our new product that we have, which will help you generate some more leads in this remote world and allow people to view homes in really compelling ways. On Thursday, we actually have Sean Whaling. He's the CEO and founder of eCommission. eCommission's a wonderful, ethical company that is providing commission advances, listing advances to agents. And in this time in particular, I think that's going to be helpful as you manage your own cash flow. And then on Friday, we're going to have a little bit of fun. And so Scott Brixton, our resident economist who was on last Friday, and if you didn't see that show, you should. It was a great discussion around what's going to happen with the economy from our vantage point. On Friday, he's also a wine expert. He is a Renaissance man if there ever was one. And he's going to come back on Friday and he's going to talk about the do's and don'ts of Chardonnay. And so you don't want to miss that one. That one's going to be interesting. So fantastic. So here's what we're going to do now. We're going to go in and I'm going to introduce Wessal Khader. So I'm really excited for today. Wessal Khader is our Chief Operating Officer. She's been with the company since 2016. She really helps to run this ship. She is a female executive leader in the mortgage industry. She was previously the president of Veterans United Home Loans. And I'm actually going to have her talk a little bit about that. But before I do that, let me bring her on. Wessal, why don't you say hi to everybody?
Hello. Hi, agentpreneurs. Hi, Randy.
Hi, Wessal. Wessal, thanks so much for coming on. So here's where I want to start, right? So, when we were prepping for this call, we talked a little bit about your experience at Veterans United at VU and the fact that VU sort of came to be during the Great Recession. And that's a consistent theme, right? So we've been talking now for a week with people about the fact that during these times is a great opportunity, perhaps the best opportunity to stand out and to do something different. And so I'd like you to just share a little bit of that story with the audience in terms of Veterans United and your experience during that time.
Yeah, sure. Thanks for having me on today. After all the conversations that I've been in with our valued mortgage company clients over the last few weeks, I thought it'd be really imperative to share some of the synthesized learnings from all of our customers back into the real estate agent space, just to add value right now. So one of the things that I've been thinking of, Randy, is just how comparable the situation we're in right now is to what happened to me personally in our company through 2008. And, there's a lot of noise that's happening. There's a lot going on in the mortgage industry with the MBA, with the MBSs that are being sold. We're seeing a lot of hedging, a lot of differences that affect everything at a micro level, but most people don't understand what any of that means. And so I wanted to just kind of wrap it up and share with people that there's one thing consistently that happens in situations like this that agents need to understand, and that is similar to 2008 when we were just a broker at Veterans United. I was a loan originator at that time and became the president of our retail division through our growth at that time. Everything's crashing, right? Mortgage market shrinking, product availability is getting smaller. The number of people able to sustain during this time is smaller. Loan volume goes down. Number of new interested buyers and sellers don't come to the table as quickly. When this happens, for the rest of the industry, outside of the real estate agent, the mortgage company, title companies, escrow companies, appraisers, every other downstream party is affected by one thing, and that is real estate agents' ability to acquire the customer. The real estate agent industry is so valuable and not going anywhere anytime soon. And that's always been our philosophy here at ListReports, because they have the relationships locally. And, as everything has shifted about that dynamic, it's just really important that real estate agents understand they are the most valuable party in the entire chain right now, and they have a tremendous amount of influence and control over how this whole thing plays out for the rest of the economy. Absolutely. And so I just want to remind agents how valuable and important we are right now to the solution, because everything's very daunting and there's all this negative news out here. But at the end of the day, back in 2008, when we were trying to find a solution and actually cut through all of the noise, the only thing we really did to be successful and actually become the number one, $10 billion VA purchase lender in the nation between 2008 and 2011, we were able to secure that position. What we did was specifically focus on the needs of real estate agents and their ability to acquire customers at that time. Yeah. It's not brain surgery, right? I mean, if I'm sitting here in a mortgage company and I'm waiting for a real estate agent to refer me a deal and they no longer have access to get to the client, My problem is not how fast I can underwrite a file anymore, right? There's a lot of differences that we need to shift our thinking. And I just wanted to remind agents that everyone in the industry needs to be behind you right now, and that ListReports certainly is. That's kind of where our philosophy is aligned right now.
No, that's great, Wessal. And I think, where we want to start and giving some of the feedback here to the audience is, what are you seeing in the market right now? So I'm actually going to pull up, the first slide that you have here, where, let's talk a little bit about what's actually happening right now from a consumer perspective, in terms of the mortgage market. So run the gamut here. What's going on right now?
Sure. A lot of news is hitting every single day about what's going on in the market, what's happening with rates. The Fed dropped this, they're buying MBSs. In reality, there are three things that are happening that are just at a very high level, easy to understand. I want to share with our agents today, just at a very high level. Three things. Number one, generally speaking, consumers, the potential buyer or potential seller that we try really hard to get through our property marketing processes and the way that agents deal with their spheres of influence, those consumers that would have been ready to buy or sell customers for a real estate agent, their confidence is just generally down, right? You see unemployment skyrocketing, discretionary spending is going down. People are just trying to save money because of the uncertainty about how long this crisis is going to last and what the long-term effects on the economy and our own personal financial situation is. You have this number one factor, which is consumers are not as apt to want to buy or sell right now, generally due to nerves. That's a big psychology shift that affects every type of consumer purchase, right? We see this in everything from toilet paper sales to, every other part of our economy. People aren't spending as much. So you have that one major factor outside of our control. Yeah. Two, the second really convoluting factor here for real estate agents in the downstream industries like mortgage lenders and others is that the largest issue we're facing, as I mentioned earlier, is the inability for real estate agents to acquire the customers that then get fed to the rest of the industry. If our primary method of customer acquisition was an open house or the derivative communications that we get access to with potential consumers after an open house, and those open houses are no longer allowed in most states, you can see that the pipeline for the industry is effectively broken. That is a massive problem. Unless every real estate agent and mortgage lender, title company, escrow company is equipped to suddenly become consumer direct right now, we have a problem with our purchase pipeline that we're usually accustomed to having grow during springtime. And it's now effectively broken. The third issue that is really the trifecta here in terms of the perfect storm that we're sitting in the middle of is that even when a consumer is interested and they find an agent, whether it's by our new virtual open house product or other, when they connect, the ability for a loan officer and a mortgage company to get that borrower qualified is diminished greatly as a result of some of the things you mentioned earlier. As the credit industry is tightening because funders and investors want to buy and service less of these loans, and they're tightening the credit requirements. So what you could have gotten in a purchase before at a 620 credit score, you might have to have a 660 credit score now. Where you could have gotten a jumbo loan from Wells Fargo previously with maybe just a few months of reserves in any bank, you might have to have a significantly different underwriting requirement. That crunch is a credit tightening. It's an underwriting investment guideline tightening that affects everybody. And that means just fewer people who could have previously gotten a loan will actually get a loan during this process. You have all these factors.
But this is very fluid, right? Like this is changing. It feels like it's changing every day, right? We're looking at these headlines and I feel like every day it's starting to tighten more and more and more. So should the audience, should we expect that to continue?
Absolutely. The refi boom that a lot of the mortgage lenders are in right now is slightly distracting when you think about the long-term product risk categories that they evaluate in order to decide how they price for certain loan products. And when the investors price for certain loan products, that drives demand and volume for sitting those products in. Yeah. If that changes, then everything downstream changes. But really, at the end of the day, the agent being able to get in front of the customer is the largest issue that everyone's going to face. And the markets will react to that form of supply and demand, not so much the after the fact qualification. So we're in the middle of something serious. And my point is, Randy, these three big issues, which is consumer confidence being down, just primary customer acquisition method for real estate agents is completely shifted, and credit is tightening. Those three things, unfortunately, are completely out of all of our control.
Right.
Right. And we have no understanding as to when the end is in sight for these issues. So today I wanted to really just share with our agents what they can do right now that's within their control for themselves, for their clients, and just for the industry, and give you a little bit of knowledge and information that could help you navigate what is inside of your control right now, which is what we should focus on. Because if you can't focus elsewhere, why not focus on the right thing?
No, I think that makes sense, right? So I think, a couple of things. One is this is changing very quickly, right? And so we're trying to stay on top of this. We're trying to deliver that information back. And so for everybody out there, definitely keep on top of this, because these rules are changing, which also creates an opportunity for you to communicate, right, with your sphere. And I think we're going to transition now, Wessal, into talking about some of the things that all of you can do right now. And some of this is repeat information, in a sense, in a good way, from what we did last week, right? Last Tuesday we had Justin on, and Justin was talking about the CARES Act and the Payment Protection Program. And so, Wessal, why don't you double down on some of that right now? And let's talk about, I have your slide up around what you can do. Let's talk a little bit about that right now.
Yeah, for sure. So right now, that is a massive act that has a lot of implications on our personal income, our businesses, and a lot of other areas. But, I spent the weekend reading in detail the section of the CARES Act that relates to the independent contractors, the self-employed, which is the majority of our real estate agents, right? I read every single letter of the amendment to the act that was issued. And this weekend, there's some very exciting news. So lots of noise about not so great stuff. But right now, for real estate agents, there's one part of the CARES Act that we're going to give you some links to in the resources here in the chat by the end of this, that I really want every single real estate agent to look at and take advantage of. It is the segment under the EIDL or the PPP options for the independent contractors that deciphers how you are allowed to apply for an SBA loan for your independent business. And the way that they calculate that, and they underwrite it, if you will, is actually very promising for the majority of the real estate agents that we're aware of. And it's based on the way that they calculate commissions, and will give you a certain amount of an advance in the future that you can effectively loan yourself based on your historic commissions and not the new expected lower commissions. There's a ton of hope inside of that particular section of the CARES Act that I encourage every real estate agent to go take a look at, because it probably applies to you. Whereas early, when the act was issued, we did not believe that the laws were going to be comprehensive enough to take care of the onesie twosie agent who has a couple deals every month. And it actually does look like, as long as your paperwork was filed effectively on your taxes the last few years, that there might be some significant improvement to your ability to access money through the SBA grants. So wanted to redirect your attention there. I heard from Nick and Tristan over at Lab Coat Agents this weekend, who had the president of NAR on. They addressed this issue on Saturday morning. I've seen a ton of action being taken on it since then. So I wanted to share that, because it is worth your time to dig into that specific segment of the CARES Act on a personal level right now. So please do that. That's the best thing you could do for your own comp right now.
I agree. And it's getting busy, right? Like it seems like there's some caps with some of these banks, and if you don't get in line in time, you're going to have to go to a different bank. And it's also clear that the first bank you should go to is the one that you have the tightest relationship with, right, Wessal?
Yes. And, we're seeing a lot of data security issues and fraud and scams. I'm sure you guys are seeing this on Craigslist, on Facebook. There's a lot of people offering help because they want to take advantage of the virtuality of our business today, which is all online. So data security, really critical. Go to who you know right now until we come out on this cleaner.
Yeah, no, that
and
makes
Randy,
sense. Go ahead, Wessal.
Just one more point I wanted to make about the CARES Act in general on the mortgage side. And this is a quick synthesization of everything that we know on the mortgage side in terms of what does the mortgage industry think of the CARES Act right now, and the fact that they issued this forbearance allowance for customers. I want to make sure agents understand the issue so that you all are prepared with the right words to take back to your customers right now. And the fact of the matter is, the bill was issued to allow for forbearance of any individual who wants to save money on their payment right now during this crisis. Whereas in 2008, when we had the same issue where people were no longer able to afford their housing payments, even when we issued a similar bill at that point to rescue the homeowner in America, we had an underwriting stipulation on that required that the borrower prove the hardship that they're experiencing, whether they lost their job due to COVID-19 or some other factor. The unfortunate issue that we've caused ourselves with the current bill as issued is that anybody can get this forbearance right now, even those who do not need need it, which is causing a significant moral hazard to the actual servicers of these loans, who still have to continue to submit principal and interest payments to the end investors, whether or not the buyers who own the homes are paying those monies. And that's going to cause a massive bottleneck that legislators are already having to deal with figuring out now. Whereas the best thing to do would be to amend the act right now to force some proof of hardship in order to qualify for forbearance. So that is the biggest industry issue that, everybody at the MBA and everyone from Barry Habib is advocating for to get change done right now, because it's one of those things that if we get wrong, because whoever made the bills initially didn't understand fully how the plumbing works, if we sustain this issue, it's going to cause us a very long-term damaging pipeline issue for the entire industry. So that is the hottest issue.
So how do you do that, right? Because the urgency and the immediacy of this is so fast, and this money needs to be deployed immediately before people run out of money, right, to be able to make these payments. And so how do you strike a balance between having people qualify, right, and prove hardship, and just getting money out there, understanding that some people are gonna take advantage of that situation?
I think it's arguable that when this happened in 2008 that we did it fast enough, but the way that it happened in that time was sufficient for the situation. Now, just as fast as we are to underwrite new jumbo loan guidelines or new asset or credit reserve requirements, we could very simply, as a servicing industry, double check that you lost your job with a piece of paper, or you just simply don't have the money in the bank with a quick asset statement, especially when most of the larger servicers have those platforms digitally right now anywhere, where you just give an authorization and they can check your bank account. There's some structural things to do, but honestly, Randy, if we all knew the answer to that, we wouldn't be in this situation. So they're trying to figure it out.
That's fair, but I think your message though around forbearance is important, right? Which is this, what you were calling a moral hazard, right? Which is,
yes,
if you're in a position to continue to pay your mortgage, you have to do that, right? If we see a lot of people decide to not pay even though they are capable, the downstream effects of that are going to be significant.
They're tremendous, and they're much, much greater than the downward effects of the way that we rolled this out in 2008. In fact, it's the same notion as this psychology that we go to fear when we have crisis mode, just like people are hoarding toilet paper all over the country. It's the same downstream problem where a few are gaining some benefit and the rest will suffer as a result of it. And so it's one of those very difficult things to balance, but it is the number one issue on the mortgage side of the world. Mm-hmm. So for agents, the call to action is, as you're discussing items with your clients, with your customers, if your homeowners are coming to you seeking advice about this right now, please do the morally right thing and encourage them to only seek forbearance in the event that they literally cannot pay those bills due to something related to COVID-19. Because the fact of the matter is, in 3 months or 6 months, whenever their forbearance is up, the homeowner still has to repay that bill. And their odds of being able to repay it in double at that time are probably lower than they are paying them right now. It's a slightly irresponsible move if you cannot, if you can't afford to pay your bill right now, not to pay it just for the entire nation.
Absolutely. So Wessal, let's transition a little bit into some advice for our agents. And again, this has been a very consistent theme in the shows that we've done, right? Which is, again, this is an unprecedented time. This is a unique opportunity to come out on top. And as I've said multiple times, the mindset that we have at ListReports is, how do we come out of this better than we entered it, right? And I think we're seeing that that's a very real possibility. And at the very least, we have that mindset. So we're pushing harder, we're digging deeper. So you have a great sort of coach sports metaphor here, but Wessal, I'm going to pull up your slide here around what you should tell yourself and others. And so why don't you talk a little bit about some of these things?
As we talked about early on, I think real estate agents do not realize how tremendously valuable each and every one is at this point in the business. The ability for agents to adapt and fix the way that they used to get business and find new ways to take advantage of this opportunity is more important to the entire economy than it ever was before, in that they are ground zero for grabbing a customer and making that customer become a homeowner. It's incredibly important. And so, because agents are known for being relationship builders and the advisors, the steady hand during the transaction for a homeowner or home seller, it's important that if you are in an advisor position, such as a real estate agent, in such an important moment in time, that you be right mentally in order to share and lead in this process, right? Now is the time to serve and connect if you're a real estate agent. And unfortunately, we have to adapt how we do that, because we're now virtual as opposed to in person, which is where we really thrive. We're relationship people in this industry. But whether you like it or not, you're up, right? The coach
Yep.
puts you in the game. Whether you wanted to be an all-star right now or not, you have to be. And how you choose to participate is completely up to you. So I would urge everyone who, and I don't know, Randy, if you shared this before, but like our median real estate agent on the platform is 57 years old. And I think that's also somewhat the national average.
Yep.
It was probably an option up until 2 or 3 weeks ago to stay doing things the old school way and relying on those local relationships. Now, unfortunately, there is no more option not to adapt into what you consider the new school. We're going digital. You're going to need to replace your tools and your methods that got you here, and you're going to have to adapt and change. And there are many companies that are seated, very well seated, to help you with technologies to do those. We obviously believe ListReports is one of the best, if not the best, to help you specifically now with the lead acquisition problem and the virtual open house needs. But there's a ton of other workflows you're going to have to rejigger and rethink about right now. And we just encourage you to realize it's no longer an option not to. And so if you need to seek out that motivation and that understanding in order to keep pushing forward, it's going to come from your own mindset. And so, Randy, I hope you have that slide that we can show with that infographic I found over the weekend. This is something I wanted to talk to our own team about tomorrow in our company-wide meeting.
Yeah, let me pull that slide up real quick, and I think just to make this clear, right, is these are also the things that we're talking to ourselves about, right? These are also the things that we're talking to our team about. And when we talked yesterday with Saul in preparation for this, you found this graphic I'm about to pull up. I'll pull it up here in just a moment. And you found this because we're all trying to figure out how to dig deep, right? We're all trying to figure out how to come out ahead. And so I'm going to pull that up for you right now. And why don't you talk a little bit about this? Let me make it full screen so people can see it more easily. And why don't you go ahead and talk through this a bit?
Well, back to the point of there's all this crazy stuff happening that's really outside of our control. And when you think about what should you do right now, how could you take advantage of the situation and just fix it, help yourself? It's about doing what you can control and focusing on what you do have influence over. And for me, as a person, as a leader, as an individual in this industry, I think about that as my own mentality first. And so, a lot of us at the company, Randy, are really into meditation and breathing exercises and refocusing ourselves and prioritizing our families in order to feel great and to keep doing this work from home thing and just keep plowing through it. For an agent who is at home in their living room by themselves trying to figure this out, the best thing you could do is to focus your mind on the most healthy areas that you can. And we think about that in the form of servant leadership. When you look at this graph, I mean, if you read every single area of here, there's about 3 segments here of where your mind might be in these 3 areas of sort of fear to learning zone to the growth zone here. This is an effective map of if you can get to the growth zone, you are effectively leading right now. And I say leadership because as an agent, your success right now will rely on the frequency and quality of your communication with your sphere of influence.
Yes.
But how you communicate with them before you actually take the actions of those emails and those text messages and those Facebook posts has to come from you having the right mindset and being at peace with what's going on and really focusing on how you serve best. And I think that just starts with you getting your mind right. So I wanted to share with you that right now, getting yourself to a good space so that you have an attractive energy to your clients and your friends and your family, your SOI, is incredibly important. And you actually have a much easier time to get a hold of those people than ever before. I'll tell you right now, Randy, when someone calls me out of the blue that I haven't heard from in a long time, I'm actually much more likely to answer the phone right now because I'm just also seeking some level of human interaction that I'm missing.
Isn't that fascinating, right? And I've heard this from people on the team, right? Where, people who aren't going out a lot or don't typically go out a lot or talk to a lot of people a lot are now talking to more people than ever before, right? There's such a big difference between I could but I didn't and I can't, right? Like there's such a big difference there. Now that we can't do certain things, it's opening up tremendous opportunities.
It is. And if you look at that growth zone segment of that graphic, I think and appreciate others. I think, that is great. Like just call someone and thank them for having been a customer, right? Appreciate the work that someone's done for you. And another tip here, apart from just being positive on the mindset scale and really focusing on that growth zone in every interaction that you're having, which will draw more clients to you. Yes. Everything from using positive content that you share, like I noticed, Randy, your team started making the shareables. Every single shareable for the last 2 weeks has been super positive and sunshiny. So helpful. We need to share the good stuff because so much of the bad stuff is simply not in our control. When you think about that, that is like the most healthy way to attract business and grow and get yourself in a good place. And we hope that you can actually take some of that with you today because these are the things in your control. Our attitude, our engagement with others is our value in the real estate industry. We are the relationship builders. How do you replace that over video? starts with your mentality, your energy, and the effort and energy you put into focusing on changing and adapting your behaviors to make the most of the situation.
Wessal, I just put a comment on screen. It's from James Eichenbaum. He's with Area Realty Group in Dana Point. So, James,
Okay.
Thank you for your comment. Thank you for watching. And he said, mindset is everything. What you focus on is
Yes.
where you go. And it is. It starts there, right? It's all about that mindset. If you're not in the right headspace, if you're not taking care of your body, and you can't go to the gym right now, but, you can walk around the house. I spoke to somebody recently who lives in a relatively small apartment and still getting 10,000 steps a day. It's a bit boring, right? But you can still get it done. So keeping our bodies healthy, keeping our minds healthy is the key to that mindset. And that mindset absolutely drives where you go, right?
I completely agree. I heard, I listened to an amazing live on LinkedIn from Loan Depot executives, and I think Anthony Shea came on, and he mentioned, there's this hashtag going around called Better Together.
Yes.
And in order to be together or around anybody else, it's got to be positive for me right now anyway. I don't want to hear anything negative. I'm turning off the news if it's negative. I just am blocking out all that negative juju right now, because guarding your own self right now matters so much. For me personally, it matters as a leader in our company. It matters as the voice into our product. If I'm not in the good space, no one else is going to be either. And that is the responsibility every agent has today. And it's also their opportunity. So I hope that you guys can take some positive messaging from this and actually interact with it and take it throughout your week. Because if you do, it's Monday. By Friday, you probably have a bunch of new deals. That's just how it works today.
Yeah. People are looking for leadership, and you're uniquely qualified to provide that leadership to them. So I think that's great. Hey, Wessal, thank you so much for joining and sharing your perspective.
Thank you for having me.
It's tremendous. It's fantastic. So thanks, Wessal. We'll have you back soon.
Thanks, Randy.
All right. Well, that was great. That's fascinating information. Again, the market is moving quickly. Wessal has been in touch with dozens of mortgage executives across the country, and she'll continue to share her perspective and what she's seeing sort of on the ground and as things change. We're going to continue to try to bring you the late breaking news as it happens. The goal here is for you to be informed so that you can take this information for yourself, hopefully get a little bit motivated, but also carry some of this information out to your sphere, because they desperately need to know what's going on, and those people still want to buy, those people still want to sell. They just don't know what to do right now. So as always, we're going to go into a fun little clip. So this is a little nod to the Disney fans out there. We've got a lot of them in the company who are really sad because they can't go to Disneyland right now, understandably, and that's okay. And so the collective internet has taken it upon themselves to pay a bit of tribute to Disney. So we're going to play a short clip here.
I am quarantined. I can social distance. I don't care how far. It won't be that long. Wash your hands with Dial. It'll be worth your while. I cannot go anywhere, so guess I'll play ping pong. Let's all social distance to defeat this one. Quarantine's a bother. It is just no fun.
So there you have it. I have to say, right, there's so much humanity that comes out of times like these, again, uniquely so. And so seeing the level of creativity and resourcefulness has been frankly inspiring, right? And everybody processes this information differently, right? Some people don't want to look at the bad news. Some people need to look at it so they understand it, they process it. Everybody's a little bit different. So understanding, how you best process this information during this time, and most importantly, making sure that you're in the right headspace to take advantage of this opportunity with the perspective that you can come out of this better than you entered it. And there's countless examples. Next week, we're going to have our friend Mark Choey on. Mark Choey was one of the founders of Climb. They sold it to Realogy. He's a regular speaker at Inman, and he has a similar story to Wessal, that they built Climb during the Great Recession, and instead of retreating, they doubled down. And so this is a time to double down. The schedule for this week is posted on our Facebook page, so please take a look at it. We have Dr. Eric Weber on tomorrow to talk about the data side of this. Don't be scared by that. It's very accessible, similar to what we did with Scott on Friday from an economist perspective. So please tune in for that, and we've got a great lineup for the week, and we'll see you tomorrow. Thanks so much, everybody. Bye.